Hey everyone, welcome back to the Mortgage Heroes Weekly Podcast Show. I'm Andy.
I'm Brian.
And I'm Will.
So we are back again, guys, with 4 hot topics today. We're going to talk about them in order. First, we got mortgage rates trending down for the third straight week. Mortgage demand climbing to the highest level in 5 weeks after interest rates move lower. And then NAR's Lawrence Yun predicts lower rates, 15% jump in existing home sales in 2024. Happy about that. Let's see what happens. And then we had a interesting survey come out. 281 realtors sound off on future of commissions in a Housing Wire survey.
House of Division.
That one is hot. So let's go from the top. So first article today, guys, is mortgage rates trend down for the third straight week. This is great news. Mortgage applications increased to their highest weekly pace in 5 years. Now, the theory here is that October inflation, the inflation report drove down the yield on the 10-year Treasury. It's partly that. There's some other things going on. I don't want to go get too far down the nerd trail. But look, mortgage rates went down. This is the third consecutive week in a row. That last week they went down. What are you guys seeing? What's happening?
Yeah, let's keep going. All the thumbs up, right? Keep thumbs up, thumbs up, thumbs up. I mean, finally, usually it was like, this time around we have more thumbs up, which is not bad.
No, so I feel it's pressure on the Fed coming up December. They're in the hot seat, and we're going to see what decisions they make based off this information that came off. But just right here in the article, it says investors priced in a 99.7% chance that the Fed will hold interest rates steady in December, according to CME Group's FedWatch tool. So, I'm excited to see. I feel that they are going to halt just because of everything that's coming out that we just saw these past few weeks. So I'm definitely on the boat of saying that they're going to stay where they're at, which is different from my last answer last week. So hey guys, there's a correction.
Well, and that's interesting. I mean, it's cool that they have this 99.7% chance the Fed will hold interest rates. But I mean, again, like, are we going to just forget and like fly past what Jerome was saying like 2 weeks ago? Mm-hmm. I mean, he's like legitimately saying we have to leave room for ourselves to make other future pace decisions. Like, hey, if you're done, just say you're done. Yeah. I understand why you don't want to say that, but you also like, why are you leaving the door open a little bit too? You don't have to like hard commit to one or the other, but dang, he's kind of leaving it open in my opinion.
And this is just a case that everything changes so rapidly. Yeah. It's that volatile. Little things like the jobless claims report, we're noticing that came higher than anticipated, though. So those things, regardless if we think inflation is going down, when that's going, it's like, hey, less affordability, less people to go in there. So this is going to cause a domino effect in other things.
And I think you're right, because so this being the third week in a row that mortgage rates were in, let's say, trending downwards. Yeah. You saw an increase in applications, which we'll get to. So park that for a second. But I think what happened is you started seeing people get like quoted 8s. You see people in the market go 8s, and then remember what happened that same week, the week after that. Remember those three industry groups wrote a letter to the Fed saying, hey, you need to paint a clear direction of what's going on. It was the week after we started flirting with this whole 8% stuff. Yeah. So I think you have that quick volatility where it also goes the other direction, where they go, ooh, we did not like what happened at 8, even though it was brief and it was for a couple of weeks. Man, a lot of stuff started moving right when that happened.
But they get the taste of what happens if we go into those levels. And either way, if we keep continuing one way or go the other way, something's going to break. So they have to be very cautious to not raise too much, but at the same time drop too quickly, which is, And
I'm going to share something, you guys, that the article taught me today. I did not know this until this article came out and shared this, that the gap between the 10-year Treasury yield and the 30-year fixed mortgage hover around 180 basis points. Those of you watching, 180 basis points is 1.8%. So in this case, what they're claiming or what they're saying is that the 10-year yield is 1.8% below the average mortgage of 30-year fixed. Now, the current 30-year mortgage rate is 280 basis points higher than the current bond yield. So our average of 1.8% higher is now 2.8% higher, thus making the argument there's room for mortgage rates to even soften and go down even further to get to where this average is of 1.8. That's a whole % difference.
Yeah, that's crazy.
So even if we're 7.25, I don't know that it gets us to 6.25, but I mean, we could be talking high 6s for going into the end of the year, maybe starting off the new year. What do you think?
I think it's possible because as we're seeing this pressure ease up on the rates, it's I mean, in the pricing just this last week, we're starting to see, a high 5 at a discount point, right? At a discount charge. And that's what I feel is going to happen, that we're going to start seeing it go lower, and then we're going to, my prediction, I can be completely wrong, but my prediction is that we'll say anywhere between the 6 and the 7% going into next year. And then there's going to be those chances where you can get that high 5, low 5 with some discount points or, a good negotiation. But I think that's going to be the healthy median where we need to stay at, because if we go down to the 5s or the 4s too quickly, we just go back into the hamster wheel and the same problem happens again. So it's like, like you said, they have to hold firm, and I feel that's what they're going to do because of the fact that, we don't want to break anything either way.
Yeah, that's crazy.
And don't get it wrong. Like, we would love to give people rates in the 5s. We would love to get them sub 5. But, there's also a consequence of that in the market. The things change when that happens. You think you hate home prices now? What if rates all of a sudden go down to 4% again? Home prices are going to go bang right back up again. I mean, and this is kind of part of what I think Lawrence Young's trying to allude to. When he's talking about the future, we're going to get to that. But I think the 6 to 7% range is where we're going to be.
Is in the horizon,
and we're probably going to be here through the rest of this year and into 2024, at least for the first several months. And again, I'm also like asterisk disclaimering everything. Like,
that's why
we're 12 months from the next election. So as we are producing this show, we're going to have an election in 12 months from now. And everything is up for grabs in the run up to an election, whether you like what's happening or dislike what's happening. Everything's up for grabs.
Yeah, and so many things will happen.
Yeah.
So
yeah.
Here's one of the other things that I did like was mortgage applications increased for the past 2 straight weeks, thanks to the continued decline in mortgage rates. I mean, I'm telling you, we saw a decline, but it wasn't like, whoa. It just felt good because we were not used to seeing that whoa. Right?
It did. I remember emailing you guys super early in the morning. Hey guys, another one. Hey guys, another good day.
It does feel good, especially when you have open applications and when you qualified a person already at the higher interest rate. Well, I had one I qualified at 8.125. Yeah. And then I revisit that conversation yesterday because we're always having to just reanalyze when rates go down, we want to reanalyze what they could afford. So we went down to 7.5.
Wow.
Right? On an $870,000 home purchase with 5% down. We went from, that 8.125 down to 7.5, and that was $300 and some difference in payment.
And
every month. That's almost $4,000 a month, $4,000 a year, less.
That drastically can influence somebody's decision whether they're, hey, I want to move forward, or hey, I don't think it's gonna make sense for me. And that's huge because right now, $50, even $100 sometimes will make you or break you, and it's very crucial.
Well, that's almost a car payment, Brian.
Exactly.
That's crazy.
Like now you can afford your car and your house.
I want to point something out, and I think this is credit to Brian. And you did email us like, "Oh, guys, look at the market; it's doing great today." Yeah. Now, you guys both locked loans that day,
exactly,
and the following day, the market took a dump on our rates, and they actually got worse for that day, and they got better the next day. But this is the reason I'm bringing this up is for context of our conversation. Yeah. It's important to know what the market's doing all the time, and it's important to be connected to the market while it's open and it's trading, so that when the market does go in your favor and you can lock something at 7.5 from 8 1/8, or even if it was 7.75 down to 7.5 in that trading session, that's a huge savings to your client long term. And knowing when to lock is critical. And this is where experience, number of transactions, volume, proximity to the market, and all that really, really helps and aids people out.
Absolutely.
Yeah. I mean, you can't predict the future, so you can only assure yourself on what the present data is. And I feel that, thankfully for the tools that we have, we pay attention to the market very closely, and we're able to make those decisions for our clients and save them thousands of dollars in these cases.
We're setting them up for success. 100%. It's definitely something we do.
And I remember, many, many years ago when I was still originating loans, I had a conversation with somebody, and we were really having a hard time trying to decide when to lock. I was like, I'm not going to decide for you. Here's my advice and here's my suggestion. You should lock today. Yeah. Well, yeah, but what if rates go lower tomorrow? I said, that's actually the wrong question. I said, would you like to lock your rate today and see it go lower tomorrow and be mad at me about that? Or would you like to float today and see the rate go higher tomorrow and be mad about that? And he's all, lock the loan.
Yep. I love that one. Hey, just leave it on them. What do you want to be mad at? You can be mad at something.
And you do have to make a choice. I mean, it's eventually it's either going to be in your favor or it's not. You can regret it one way or another. And honestly, the regret watching it go down an eighth the next day is better than watching it go up a quarter the next.
Yeah,
believe me.
So, I like to revisit that. That the loan applications were high, but what people don't say, we're still at a 40-year low.
Yeah. Yes.
You know what I mean? So it's like, let's not get so excited. Rates are still high. Affordability is still the real thing.
That's still the biggest issue.
Yeah, affordability is still a real thing. And again, I'm going to make the argument in transition to the next article, not the argument, but I guess state the case that we're going to see more mortgage applications. The house equity is going to be the ATM moving forward.
Yes.
Especially with people encounter more uncertainty. And the Fed keeps their rates where they're at. If they're done, they're done. If they're not done, they're going to go another quarter. But regardless, they're going to be here for a while.
Yeah.
And I think that's a good transition to the next article because mortgage applications are up. It is relative to historical lows, but let's talk about it. Mortgage demand climbs to the highest level in 5 weeks after interest rates move lower. Applications to refinance a home increased 2% for the week and were 7% higher than the same week 1 year ago. You know what else is 7% higher from the same week a year ago? My weight.
My gas.
My weight. My weight. And here's the thing. 7% higher than the same week a year ago, and rates are higher than a week ago.
Yeah.
So, and there's lots of haters. There's lots of comment. Oh, how can people do this in the market right now? How can people want to do a refinance cash out? Look, the situation's a situation.
Yeah.
If their situation needing to be solved generates a loan application, and I think that's what we're seeing here.
Absolutely. Absolutely. You know, as a matter of fact, I had a client today. She has a project in the Philippines. She needs $80,000 to finish her project, and her house is almost free and clear here. So she's like, you know what? It's hard for me as a retired woman to go out there and just get a personal loan, even though I have excellent credit, et cetera. So I might as well tap into, my equity and see what we can do. So how do I do that? I'm actually suggesting just go with a home equity line of credit.
Wow. Wait, hold. So she's going to refinance or take money out of her house here, and then she's going to use that money to go and finish what she's got to finish in the Philippines.
In the Philippines, correct.
And it's already free and clear. Or it's close to free and clear.
It's close. Only when I say that, it's like it's 200 and change.
Right, but I mean the values.
Like
what?
800 and change.
Oh my gosh.
Yeah. And she only needs 60. So I'm like, well, let's see if we can go 100 and change.
Wow.
That way you could really complete the project.
Okay, so right now, I didn't know you had this in your back pocket for today's show, but this is a great example, a live example, if you will, of this is what generates mortgage demand, a need that is outside of a solution on the other end of the ocean over in the Philippines that someone right here needs this, and it may not make sense on the surface. Oh, why would they do a HELOC at 12 or 10 or 14, whatever? Well, because if you don't have that 80,000 or 100,000 sitting in the bank or sitting in your cash or on your mattress, you need to get it from somewhere. And if your house has a very, very low balance on it, it's worth a lot of money. Hey, the equity is the ATM.
That's it. Hey, and it's when it's for business. I didn't get into the particulars what she was going to generate because I haven't met her. I'm going to have an appointment with her, coming Tuesday. But then I'll get that information at that point in time, just so that we understand the numbers and all that good stuff and go from there.
But piggybacking off what you said, that's a huge opportunity.
Yeah,
Will.
absolutely.
Like just for anybody else listening to this that wants to start another business, wants to start a different source of income. If you can't get a business loan, because I know it's a lot tougher to get business funding nowadays, and you have a house, why don't you just tap into your equity? And that's going to be way better than you taking out a business loan. You recuperate it right back, and I bet you the rate's going to be a lot lower than if you went to the bank.
Probably so.
Yeah. Well, one of the things that I wanted to bring up about this article regarding mortgage demand and applications increasing is, the claim was mortgage rates this month are not that much different than November of last year. I'm like, are you sure? Are you really sure? Because that does not sound right to me.
Yeah.
Not going to fact check it live. But I mean, guys, we were at November of 2022. We were high fives, low sixes. We weren't in the 7.5 and 7.75. This is not accurate, I don't think. And then we go on to say, so, there's not a lot of new incentive to refinance. Most borrowers carry much lower interest rates due to the record low rates seen during the first few years of the pandemic. So then why the notable increase of applications? Guys, what is causing the increase of applications?
I think it's one of those things that maybe people are starting to say like, hey, well, I should sell now before, I don't know what happens. So those people that either, are on the fence and just are unsure because they don't have a source where they're actually, get information that lets them know what is going to happen. They're probably like, dude, this is probably my last chance. I have to put it up on the market. Who knows what's going to happen next year?
And here's the thing. And it goes on to say both purchase and refinance applications increased to the highest weekly pace in 5 weeks. Both purchase and refinance applications increased to the highest weekly pace in 5 weeks.
But again, guys, we're still at a historical low.
Yeah,
but here's the thing.
Definitely.
Here's what I look at. I go, okay, fine. If there's like a dip in the road, cool. Are we coming out of the dip? Like if this is the trough, like the lowest point of volume of activity, fine. I would love to get that in the rearview mirror sooner rather than later, and at least try to get some, get some nice horizon in front of our eyeballs. So I think that's what's going on, especially if this has been happening over a couple weeks. So it's good news, and good news has been rare around here these days, hasn't it, guys?
It has, but I feel like overall, I mean, rates do come down, and they might just give a burst of buyers to the market. But at the end of the day, affordability, lack of inventory is still going to be a factor in the game.
Absolutely.
So it doesn't matter if rates come down, you're still going to be forced with another obstacle, which is finding the house, and then in between that time, your rates might go right back up. So it's great news, but take it in full context.
And
Correct.
you know what's interesting to me is that it's happening at this time of the year. I mean, we're coming into like what we traditionally would call a slower period of the year. But here's what's funny also. I was thinking about this in preparation for the show. I say this all the time about the mortgage industry in general. It's never been true for us. It's not like even it never has.
picked up
Like
this
can you name a super quiet and dead December? They for some reason, I don't know why. I don't know if it's just us or what. Like November and December, it just gets like chaotic.
Yeah, it gets chaotic.
So in this normal time when we go, oh, well, it's kind of quiet this time of year, and the industry slows down, all the headlines say that kind of stuff, and like it's like the opposite for us, which is great as far as business is concerned, but it is a little odd.
Yeah,
Not complaining.
It is, exactly. We're not complaining.
I'm not complaining. I could get busier too.
All right. Well, mortgage rates will continue to ebb and flow as they will, guys. I think we're going to see an increase in applications, even more so going into the Christmas season. I honestly think some people are going to be doing stuff because they want to beat the tax season. They want to do it in 2023. Yeah. And we're kind of getting close to the window where, like, if you don't do it now, you're going to run out of time a little bit, only because there's like bank closures because of Thanksgiving and bank closures because of Christmas and New Year. So
we basically lose all next week.
You basically have 6 weeks of the year left, but you really don't operate as if you have only 4 just because of bank closures. So.
Yeah.
All right, guys.
Maybe you have that.
Maybe, yeah. Next article, we have NAR's Lawrence Yun predicts lower rates and a 15% jump in existing home sales in 2024. Thank God. In addition to a lift in home sales, Chief Economist Lawrence Yun forecasts lower mortgage rates between 6 and 7% by spring of 2024. All right, guys. Uncle Lawrence and his band of brothers and his other housing agency and associations, they wrote a letter to Jerome Powell a couple of weeks ago. And again, we don't know if this matters or it doesn't. Yeah. And after they wrote the letter and it was in the news headlines for about the 48-hour cycle, we didn't really see much of that.
But they got a lawsuit.
But to check out, they got this big ass lawsuit going on. But I'm really glad that he's at least stepping forward and saying something. We've been talking the last couple of weeks because of the whole lawsuit. Like, where are all the voices? Where are all the people like standing up against this thing and just trying to advocate for some sort of direction? And to Lawrence's credit, I'm going to say he's actually been going to bat and trying to say, hey, let's get some direction, Jerome. Me and all these other the Mortgage Bankers Association and National Association of Home Builders, we want to know what's going on. And now he's like, okay, we're getting some information, and I think I have a little bit of direction. And guess what? Now he's stating what it is.
Well, NAR's still there, so they're not extinct yet, right? We still haven't seen what's going to really go down, but I think it is their duty to go out there and present some type of data.
Sure. Yeah.
Not sure that I agree with the 15% jump in existing. I mean, just imagine here in California and San Diego, $900,000 is your median sales price. Another 15%.
Not price, volume of homes. Volume
I'm
of sales.
sorry. I got it all wrong.
Where's
my coffee?
Where's the coffee? Oh, you know what? The coffee's missing.
Yeah.
Uh-oh.
Jeez.
All right.
Sorry, guys.
No. So, it is. It's not the price. It's going to be the volume.
Got
of
it.
sales.
Okay.
So
the volume.
That would be welcome because we need more inventory. And I think his claiming like, hey, we're going to see this inventory and this buyer and sellers come to meet in the middle somewhere.
And with that said, I do agree with that. With the data that we've been seeing, the trend, I can see that we're going to have more homes available.
For sure.
Especially, believe it or not, they were saying, and I got this from Altos, they were predicting that any time when interest rates are higher, that's when people are selling more homes. There's more homes in the market. And it's different from before, which is pretty crazy. So it's just hard to understand that fact. But based on that, I see that. And we did see an upward trend that more homes are starting to come up on the market.
Yep.
Yeah, and even with the jobless claims coming in, we expect that more of those that's going to go higher, and I think that's going to prompt more homeowners to put houses on the market, and that's something that we're yet to see into the 2024, which I think is still something that is going to be a huge boost for inventory.
Yeah.
So even though at the same time, if Uncle Powell just increases the Fed funds rate once again in December, that could just give us a little good idea that maybe we can predict with more homes being available too. Who knows?
That's actually a really good argument.
Well, and here's the other thing too. Like, let's say he's wrong and it's not 15% and it's only 10. I'm not going to be mad about that either. No. I mean, that's still going to be more than 2023. And that would also that will also include that we've have some sort of like found our way out of the affordability crisis, and it's not a crisis anymore. It's more of a problem. So an upgrade on the affordability crisis to a problem, and even if we missed his mark of 15% more existing home sales in 24, fine. If it's 10, great. I'll even take 5 at this point.
Yeah, we take anything. Give us what you can.
Not
but
to
it's still positive.
But it's still great. Yes, it's still
positive.
more. That's what I'm saying. Like, I think maybe if we hit this trough of prices and then we hit a peak in rates, and we hit a trough of existing home sales being the lowest in decades. I think this is all kind of turning the corner to maybe actually work out. Oh my God, I just said that. I think it's actually going to possibly work out. Not for NAR. They got problems still.
Did you just have a
I'm
magic
talking
moment?
about the market. I think for the market it might work out. NAR, they got some problems still. But you know, he does cite some worrying concerns, guys. You know, business spending is down due to soaring borrowing costs. That's connected to the Fed. Labor market cooling down, and then unemployment rate climbing. So there's certainly some things to watch out for.
Unemployment, credit card. I mean, guys, there's a lot going on. So, and this is not just a nationwide crisis. This is a global pandemic. You know, everybody, and this is where we're having all this feel. So all these things will actually have some type of relation to what's happening here in our market.
Everything's interconnected.
Yeah.
And going back to what you said about rates hitting its peak, you went on to say, I believe we've already reached a peak in terms of interest rate. The question is, when are rates going to come down? And I mean, that's the magic question. But then he follows up and says the 10-year Treasury yield is at 4.4%, which historically means that mortgage rates could be at 6.4%, but they're much higher, which goes back to that 280 basis points that were off. And then he goes on to say mortgage rates will fall between 6 and 7% by spring of 2024. He also expects more sellers to enter the market as they adapt to prolonged higher rates, which is exactly what we just talked about. That honestly, like, you're either going to have to adapt or you're going to lose out on opportunities that are presented by the market.
Yeah.
So my question for you guys is, do you think this is him forecasting and to the tag? What's the tag?
The tag.
Do you think this is the tail wagging the dog, or do you think he's resting on something else that maybe he's not telling yet?
I really hope he's being very optimistic and knows something that we don't, because it sounds like he's very, very spot on to what's happening, and along with the data that we've been following. So for me, it sounds like he's coming from a place of data and logic rather than, hey, I'm just trying to, put something up there to, weather the storm and sound like we have positive stuff coming out.
What do you think? Is that the tail wagging the dog?
Yeah, no. I definitely have to agree with some of the things that he actually has to say.
Because you're not wrong.
So one of the things that led me to ask you guys that question today is because, he's saying he counts on home builders to ramp up new construction. That's kind of like, hey, wink, wink. Come on, guys. Come on, guys. Let's go.
Yeah. Well, some of the stuff, like I said, I agree with some of the stuff, but like builders, listen, they have their own mafia going on. You know what I mean?
They do.
They're not going to go build just right away. Like they're going to do themselves a disservice.
Well, so I think that's a very interesting point. So there's like a math. I go to math right away, right? So I think about, the price of labor is really high, price of materials is high. Okay, but if home prices have stabilized and fallen, or not fallen, but like they've hit their localized bottom, then they don't have anywhere else to go up. And if Lawrence is saying at the same time that there's going to be rates kind of softening to that 6 to 7 range, couldn't there be a case for builders to actually build homes again with a higher price, even if their as long as they can keep their margin the same?
Yeah.
Even their material cost, labor cost goes down, price goes down. Yeah. Material cost goes up, their price can go up because the market's going to sustain that. There's enough demand. Yeah? No.
No. Of course, most certainly. But again, it just depends where you're at, what area you're in. There's some developers. I'm hearing some other states where they have a lot of brand new homes and they're just sitting. And now they have to really incentivize them on top of incentivizing them.
Oh, wow.
Right? So obviously for us here that we're in San Diego, it makes sense that we have a shortage in homes. And there's just still a demand of properties. Yeah. So we have to I think it's just going to be where you're at. Mm-hmm. Certain things like this is going to be where you're at. Areas matter.
Yeah, no, totally. And I guess I look at that and I kind of I put all the variables on the table and look at all the, read the tea leaves as they say. I'm like, I think he's trying to get them to nudge, like, come on, go build some more homes. So that being said, if you care about new home builds and all that, look for the permit releases that come out every single month and the new home build sale numbers. Those will both give you clues and kind of give you an insight on what's going on. So, Brian, you have final thoughts on this article?
Just in the end, I feel like Yoon threw a jab at the lawsuit, not really saying anything about it, but he did say consumers are happy with real estate service. The market fiercely competitive with so many business models amongst which to choose, from do-it-yourself to iBuyers to discount brokerages to full service and rebates. He said, but then he went and said American home buyers have benefited immensely from such wide range choices in real estate services. Moreover, homeowners have accumulated sizable wealth over time, and I mean it's true. For the homeowners that benefit, I bet you there's a lot of homeowners homeowners that said selling my house and investing in real estate was the best thing ever. Now I did this. And yeah, of course, there's going to be people that got a short end of the stick or feel like they got a bad deal. But then again, everything was in the paperwork. So you can't really be mad if you sign and agree to something. Read the fine print. It's a double-edged sword.
Wait. It's not a fine print, though.
Oh, it's huge.
It's huge.
Have you seen the RPAs?
Yeah.
It clearly says the percentage.
It's not fine print in this case.
I think, going on to the next article, there's a lot of that will kind of match together, and you're going to see really what people are actually feeling, what they think about, what's happening from the inside.
Yeah. This is NAR doing their job. That's Lawrence going, okay, I got to do a little peddling right now, if you will. I don't know if peddling's the right word. That's the one I thought of, but
that's throw something out there.
That's him doing his job, but let's see how everyone feels about it. So moving on to the Data Digest, guys, 281 realtors sound off on future of commissions in a Housing Wire survey. More than 60% of agents and brokers surveyed said that the real estate industry should not change its compensation practices. This is a wild one. There's a lot of opinion in here. There's a lot of excerpts from people's survey responses, which I like. I want to go over a couple of them. I'll start. This is in response to the Seitzer-Burnett commission lawsuit and the pending appeal that's going to come for a $1.8 billion lawsuit settlement. One of the very first quotes right out the gate. Unfortunately, the level of misunderstanding of how agents are paid and the underrated value of their service is out of control. There are more and more copycat lawsuits, and I believe the situation is far too difficult to control now. What a shame.
I wrote, what a mess. That's literally what I wrote. I just feel at this point, everyone's trying to get in, hey, they saw somebody, take lead and said, hey, this happened to me. And then it's so easy to everybody say, well, it happened to me too. Hey, it happened to me too. And then a whole neighborhood's like, hey, it happened to everybody here. Yeah. So I think it's a lot of, people getting in to see if they can get, a piece of the pie. But I mean, I think it's very interesting.
It's almost like selling real estate, right? Some people are like, hey, how many homes did you sell? Oh, what did you make? Oh, I want to become a realtor too.
Oh, you sued? Right? How much did you sue for?
Yeah.
How much did you get? I want to sue too.
In this case, I bought a home and I was represented by the realtor. What did the realtor make in commission? Oh, he made that much. He sold 5 properties. I made that much. Well, now the attorneys are looking in that same way. Oh, well, wait a minute.
Oh, but wait for this. I got a counter argument to that one.
So here's the thing. Most agents and brokers anonymously told Housing Wire in this survey that they don't expect the verdict to be overturned, which means then, to your point, this sets a precedent. This absolutely sets a precedent that in these types of commission-based organizational sales agreements, it's all up for target.
Yeah.
I don't care. Again, I've said this on 2 shows in a row. I don't care if you're buying a Rolex, you're buying a Ferrari, or you're buying a Honda Accord or whatever.
Yeah,
anything that's got commission baked in is up for grabs, honestly. I mean, now you can just go class action and everything.
Yeah, correct. And I mean, who allows all this to happen? Our own government, right?
Well, the rules,
the people in charge.
But here's the thing:
who do we really have to go by?
But here's the thing: you made this point a couple of weeks ago. Yeah. Where are all the leaders? Where are all the leaders that were going to stand on this side? No, not the opinion.
There's 281.
No, I'm talking. Yeah, I'm remember you were talking about like the Gary Kellers.
Of course, exactly.
Gary Keller goes stick his neck out there and like going to go. Okay, well he's named in the lawsuit, but like where's everybody else chiming in and saying like, hey, we got to do something here?
Do you think that kind of taints the industry even more? The fact that hey, everyone's quiet, so therefore, if you're quiet, that means hey, you might be complicit. Taking a fault. Or you're kind of like, I don't know, like, if I talk, I might get rubbed into this. Like, I just feel like, if you have nothing to hide, you shouldn't hide.
But there isn't hiding. Lawrence, again, your point is that in the last article, Lawrence was just saying that the homeowners have benefited immensely from a wide-ranging variety of choices, including iBuying, discount brokerages, full service, and even getting rebates. So, like, what are they hiding behind, Brian? I don't know. I'm not arguing with you. I don't know what they're hiding behind.
I think this is, again, it's just new grounds, a lot of realtors aren't going out there. It's like, well, maybe it doesn't come to me, right? Maybe they're not going to knock on my door for this. It's their deal. I don't have time for that right now, etc. Now that this is kind of going and spreading, it's in New York. Now it's going to Texas. And they're actually getting now teams, groups, not just identifying a corporate company, but teams that felt like there was colluding involved, etc. So we're starting to see all this thing. Everybody's going after everyone. Yeah. So now I think I think there's going to be more realtors, bigger companies just becoming more vocal in these next months to come. And they have to.
Yeah, that's what I say. It has to, because if not, then the narrative is going to get controlled by the person that it's controlling the narrative and saying what's happening when nobody's like, standing up for themselves or for their industry.
And right after going on TV and talking about this $1.8 billion lawsuit, which, by the way, again, if we're going to talk about fixed pricing, the standard for that type of case is 30%. Last time I checked, guys, 30% is more than 6%.
Yeah.
By like what, fivefold? Yes.
I mean, you're good in math. 1.8 at that 30%. What is that?
So here we go on the show live. I think that we should just rally everyone together and let's start a class action lawsuit against lawyers. Should we do that? Should we do that? Because apparently the gate has been thrown open, and out of all the lawsuits and all this, I mean, look, this is how silly it is. I'm obviously not being serious, but come on. That's exactly what is happening right here.
Yeah, that's crazy.
People should have a choice, and this is going to remove that choice. And here's what's going to happen. The cheap people are the cheaper people are going to give lower service or no service, and then the people who are kind of at that like 6% already, they're actually going to increase their fee. I guarantee you right now, people are going to increase their fee because they're going to. Well, there's no buyer's agents. I got to do more work now, so more's going to stay on my side of the fence. I guarantee you, it's not going to have this middle ground. It's going to split this way.
Yeah. You know, all this just gets, for me personally, my opinion, it just upsets me because we got, first-time home buyers, we got veterans, they need assistance, and now what are we going to do for them? Especially we have no representation. Like, come on, guys.
It's going to have to come back. Like,
this is just crazy.
Okay, so when's the VA going to step up and say something? Like, because the VA is either going to like roll over and have to keel to it, or they're going to actually have to say, hey, no, we can't do this. FHA is going to have to do this. So
VA funded fee no more, and then now that goes towards the buyer's agent.
Yeah. But the lawsuit.
But they're not going to do that.
They're not going to do that. That's what funds the whole program.
Exactly.
The lawsuit might have been settled in court, but this is not done. The government is going to say something about this because it does affect things, even Fannie and Freddie, because it ultimately affects what's financed, what's not financed.
Exactly.
And so this isn't going to go like untouched by these agencies before it actually gets all the way down to where we're at now. I think the really disappointing part is that it sets the precedent like we're talking about. And there's a lot of people disappointed, and there will be plenty of people that leave their real estate career because like, I don't want to do this. Part-timers maybe like, I don't want to do this anymore.
They already have.
Yeah, well, if they haven't already, they're going to.
It's just going to add to that.
But here's what I also caution is, for those of you who are still hanging on, but you're doing the right thing in your career, so not our audience in general, but like, audience, just give me a second. I'm talking to our realtor friends here. Yeah. Like, stick to it. Like, if you're going to be in this career and you're going to do this for the long term, stick to it. Do what you're supposed to do. Treat your current clients right. Promote and market the things and the services that will offer solutions to people in the market. We're doing it all the time for people anyways. If you want to be in this career, fully commit and do it.
Yeah.
So, I mean, just to piggyback off of that, I feel that if you give up, you're giving that, that market share to somebody else. So right now, the people that do stick it out, I feel you're gonna be okay. And what I think was kind of like a slap in the face that they put in this article was real estate professionals should be paid the same way accountants, lawyers, and other professionals do by the hour and by contract. One agent said, I bet you that agent doesn't close deals. But the main leading lawyer for this huge court case is taking a 30% cut from that.
Yeah.
So I mean, isn't that baked in?
Isn't it baked in? Yes, it is.
Baked in?
So it's not a $1.8 billion lawsuit.
Please, someone tell me, what is the difference between
if you win that, do you go back to work? Like what do you do?
No, you get incentivized. You get incentivized to go get more. Go get more of those.
So you guys, that's $540 million. That could come off the top, but it won't.
That's it. I'm done.
Like,
I don't
you know
need to
what
go
I
get
mean?
more. I'm done.
So here's the thing. All these
so
professions,
hypocritical.
all these professions you're talking about, they're non-sales professions. Now, I'm not saying that if you have an accounting firm, you have to don't have to sell your service. I'm saying if you're an accountant, you don't have to sell the person. They need a service from you to do their accounting, do their taxes. And a lot of attorneys that work on retainer are, I'll say, selling their service, but that is by the hour. That is different than what we do in real estate, what you do in mortgage, what you do in car sales, what you do in furniture sales, what you do in watch sales. Again, what you do in boat sales, what you do in RV sales. Yeah. How many industries do you guys want to name?
We can keep going because you're 100% right.
I'll get another one. How about the people that make money based on shoe sales at Nordstrom's? That's the most famous example is people that work in Nordstrom's and they sell shoes. They get paid based off selling shoes. Yeah. The commission that they're paid is in the price that's on the shelf.
Yeah.
So are we going to just go after all that stuff too? Yes or no?
Well, you would have to if it's fair across the board, right?
I guess. I mean, yeah, someone's going to have to want to take that lawsuit.
Exactly. This is just crazy.
It's going to have to be big
considering
enough,
that you're going to go drive a client, you're going to show the property, and you're not showing, on average, you show 50 properties Okay. Then once you get in escrow, you negotiate for the buyer to make sure, because you have a lot of buyers. Well, that's it. That's 900,000. I don't want to offer 900,000. I'll offer 820. So then you have to go right there. Your negotiation comes into place. Then once you get in escrow, there's title. Well, you have to look at all that information as a buyer's agent. Then you have to get a home inspector in there. And then if there's plumbing issues that happen, because it happened, I have a transaction that there's plumbing issues, and now we have to negotiate that, get plumbers over there, get the listing agent to do the repairs, etc. Like, come on, this is proper representation. And now you just want to put pay them hourly, or
well, how many hours is that? And if it takes 90 days on average for a transaction to happen, how many hours are you not spending with your buyer, working on your buyer's profile, working on everything? I don't think that model would math right, because of the fact that you're going to pay some crazy amount either way, whether you skin it this way, the hours.
It doesn't, and it also assumes that you're only working one person at a time, which is not true.
Well, there you go. So now you have multiple hours that get paid to you by multiple people.
So let's just take a random survey of the three of us. Okay, Memo, if you were to guess right now how many people you have pre-qualified but have not yet bought a house in 2023, is it 10, 20, 30, 40, 50, 60? Stop me whenever.
Yeah. How many? Going. Just keep going.
Let's just say, okay, 100. Is that fair? Let's say you pre-qualified
exactly.
eight people a month. Okay. Yeah. Let's say you pre-qualified 100 people who still have not yet gotten into escrow. That's not one a month. That's 8.3 a month. Yeah. So that's 100 people that you're going to get paid hourly for.
Yeah.
So if you're getting paid $50 an hour for each of those, you're basically making some sort of the equivalent of what it would be to close the loans.
You know what? I'm going to go to McDonald's.
Then here's no. Here's the other thing.
No, please.
Here's the other thing is that there's this idea that, not every transaction takes 40 hours. That's true. Some of them take twice as much. Some of them take 3 times as much. Some of them take a lot longer and money up front that you only recuperate when you close. And I'm also going to say this. Sometimes you do what's right for people up front. The deal doesn't work out, and you still stuck with the bill.
Oh, yeah.
And that bill isn't going to be paid by your hourly rate, whatever that hourly rate might be.
You know what? And this actually goes hand in hand with anything that you do.
Yeah.
So again, I disagree with all of this.
It lacks a lot of foresight.
One thing that, I think will shed some light on that is that as a commission worker, you're incentivized to get the job done. You don't get compensated until
showing up.
By showing up, clocking in, and doing tasks. You get compensated by either doing the service, getting them to the finish line, and getting the job done. And if you don't get paid.
That's right.
But if you're hourly, you could show up half-assed. You could just show up, not be there, but you're still getting compensated, right? So who's more incentivized to get the job done with passion, with commitment, because they know that if they don't, they're not going to get compensated. Right. But either way, if you're an hourly, you're going to get compensated whether you get the job done or not.
Right.
Yeah.
Mm-hmm. Yeah. Well,
who would you like to be working for you?
As we were talking about this, guys, I have a number of friends who are in financial planning, and there is a very loose and unspoken rule about management fees at 1% of AUM, assets under management. So if you want to talk about recurring fees year over year, which are not even transactional, there's a lot of money in that. And I'm not trying to take money out of people's pockets before you go in the comments like, oh, this guy's hating on financial. No, I'm not. They do a very valuable service to my grandmother, my parents, all of us. Yeah. But I'm just saying, if you're going to open up the door to one thing, you got to open it to all. And I think that this is a very, very dangerous precedent for every industry that has something that's percent connected to commissions and payouts relative to performance of the service and product.
Yeah. Well, I'm just curious to see what's going to happen next. All these other lawsuits are going in. It's just like who you hire. Who you hire is going to be very important in these next coming months. In this case, I think the first one was lost only because the person who was hired. In this case, that other attorney that we're saying that won the $1.8 million, it was a good attorney. The defense wasn't as good.
Hourly rate.
Right, hourly hour rate, and so or the 1%ers,
or a salary, like
Legal Zoom.
There you go. So I think that's going to raise eyebrows now and have that aha moment. Okay, now I'm going to have to invest in a top person.
And here's what's funny. See what 30% gets you? $1.8 billion.
Yeah.
hey, I put $1 in if I get 5.
There it is, guys. So
good point, Will.
I don't know. I don't know. Again, I love this subject. I hate it.
There's also, I know this will be my last thought. There's also something to be said for your expertise. Okay. And there's an old parable about a plumber who goes and fixes a leak in the sink at this woman's house, and he's there for like 10 minutes, and he charged $350 for the part in the service, and he walks out the door. She's like, "Why am I paying you $350? You were here for 10 minutes." He goes, "No, I've been in this business for 30 years. You're paying me to know exactly what to do and how to fix it with a $10 part, but my experience, my expertise is what led me to do it for this price and be out of your way right away. Your leak is fixed. The bill's $350." So there's something to be said about that, because you can get the cheaper plumber, and they may not know what to do. They might cause other damage. And again, I'm not disparaging plumbers. I'm just using a metaphor, everybody. Yeah. And, there is a cost to you to go the cheap route. Just because something's cheaper does not mean it's better. Rarely is that the case.
There is that saying.
You get what you pay for.
That's it.
And I feel that if you're an agent and you know your value, you know your worth, you really have nothing to worry about. The market's going to adjust, so will you, and you'll keep doing business, and you'll find a way. And those who are, vulnerable or maybe scared about all this, then maybe it's time to really reevaluate your business and put yourself in a place of confidence so that these things don't scare you and you're like, I know my worth, I can continue to move forward.
Everyone who's going to be like cheering about this, like, "Oh, that's great, realtors made too much money." Good luck on your own, everybody.
Yeah. Oh man, this is great, man. It's just, it kind of goes back to when times are good, bad habits are formed.
That's right.
When things are bad, good habits.
Yeah.
Right. Exactly.
All right. Well, you guys, great show today. Let's wrap up. Memo, best part of the show. What'd you enjoy the best today?
Best part of the show, honestly, is listening to NAR, just going out there, even despite everything that's going on. I'm telling you, they're kicked, they're in their heels, their knees, they're pretty much just done, right? But they're still out there. They're still going. They're still moving forward. They still have light at the end of the tunnel where they're feeling like we're going to find some type of resolution in this.
Yeah.
And so I think it's just now we could all combine forces and really help the cause, because this is going to have a tremendous effect in the consumer, and it's going to have an effect on a lot of lives, especially realtors. It's going to get a mental. So get away from the mental side. Nothing's happened yet. Okay. Let's not pretend these things are happening now, because they're not. It's far from it.
Yeah.
So just keep your head in the game is my only advice. And that's what I'm doing for myself, keeping my head in the game. I'm protecting our realtors because I work with a lot of realtor partners, and I'm proud of them for everything that they do, and I just think it's unfair of what they're doing here for them. And that's why I disagree with this, and I'm 2 thumbs up with NAR. Just continue out there and be positive.
Awesome. Show up and do the work.
Show up and do the work.
Show up and do the work.
Brian, how about you? Best part of the show?
I think for me, it's having that, that breeze of lower rates these last couple of weeks, and I think it shows that there's something that's being done right, that's working in the pressure and the fight against inflation. But then again, we're not out of the woods yet, but it is refreshing to see that there's something that's positive coming out of everything that they've been doing so far that seems negative.
Yeah, that's awesome. I am really happy that demand was an uptick. I know it's historically still very low and it's in the trenches compared to where we were just a couple of years ago, but those were our historical highs ever for volume. So I think seeing that demand is coming back, it means a couple of things for me. Number one, people are rolling around and warming up to the idea that, hey, this is just where we're at. If I'm going to make a move in my life and I want something to happen, I got to have to do it at some point. Whether it's painful now or painful later, it's probably going to be painful to a certain degree. And the other thing too is that that's also confirmation to me and validation that the solutions you guys have been bringing on the show this last month, these are actually happening. And I understand that on the surface, some of these things may not make sense. You go, why would someone get a 14% HELOC or a 12% HELOC? Well, their credit cards are 20 or 25 or 30% in some cases and variable. So, when someone's saving $1,300 a month or $1,200 a month out of pocket, even though it had to be transferred from home equity, I think seeing demand come back in that way is validation that that's happening, because it's also addressing the suspicion that people are silently suffering and they're looking to their home as a solution for them. And I think that's honestly what's happening when you look under the surface deep enough. That's the calls you're getting. It's what I'm hearing talking to other people and our friends in the industry. People just don't want to admit it for a variety of reasons, but I think that's what's going on.
I agree 100% with that. I don't think they're just admitting it. They just don't understand the reason or why, and once they realize it, hopefully it's not too late at sometimes, because we're also getting those calls, So, but it's just certain things are making sense because it's a have to now, they have to pay certain things. So I get it. And and that's why I like doing these, because it just makes us pay more attention to what's going on. Actually, have a better understanding on data and how to interpret that data so that we can be a better resolution for, not only ourselves, our clients, and our family members.
And I think that's huge because we're able to look at it from a logical sense. And I know at home, a lot of people look at it with their emotional eyes. And at times, you have to take that lens off and just look at it through a logical sense and say, hey, this is black, this is white, and I know that I need to do this and not do that.
Yeah. Well, great show today, guys. Thank you so much for joining me to talk about these things. And we want to tell everyone watching happy Thanksgiving.
Happy Thanksgiving.
We hope you enjoy
happy.
your time with your family and your friends. Please be safe. Enjoy your long weekend and do some great Black Friday shopping. If you're doing Black Friday shopping this week, everybody, enjoy it. Get me and something give me something. Give Memo something. Give Brian something. Send it to the office.
Send me lead.
All right.
It's definitely a time for giving, and let's get back to those and let's go out there and make a difference. And definitely in these times, let's bring some smiles and just have an upbeat, upbeat personality with everything that we do. It's going to be fun.
And I encourage you to speak to your family members from out of state. How's their market doing? How's their real estate market performing? And compare and contrast so you guys could see that, hey, it's a lot different in other markets, but it could be the same. So definitely inviting conversation.
All right.
And again,
love you guys. Great show today. Thankful for all you watching. If you're on YouTube today, make sure that you subscribe to the channel, turn on notifications so you catch every episode right when it releases. If you're listening on Google or Apple Podcasts, please remember to turn on direct download so that every time we have an episode that goes live, you get it first. Thanks for watching, and we'll see you again next week.
See ya.